The stock market massacre continues. Celsius stock down 52+% in the past 10 weeks. I'm drinking a Celsius today. That's why I'm all jacked up, baby. Lululemon stock is now down 49.6%. We can call it 50% so far year to date. That stock will not stop crashing. Estee Lauder under $100 now. 5-year lows on that stock, now down almost 50% in the past 5 years. Incredible fall for Estee Lauder. We have Shopify stock down 22.5% so far this year. Buc-ee's going into these earnings, stock down over 20% this year. Stock is bouncing back after hours. Mr. Softy, the stock has gotten a little softy lately. Stock's down about 6% in the past month and then down another 6% plus after hours right now. Nvidia stock, the darling, the most perfect stock in the history of mankind, is down 22% in just the past 3 weeks, folks. CrowdStrike down a shocking 40% or so just in the past 2 weeks. It's incredible. I want to talk about each of these stocks, talk about if I think there's opportunity in these guys or not opportunity, and just kind of react to and share my opinions in regards to that, right? And then we're going to react to two little clips here. This one's about AMD. AMD reported earnings after the bell. I want to talk AMD. I want to run some projections on AMD, figure out if AMD's a stock to buy or not. And then Mr. Softy, we're going to talk a little Microsoft. We'll run some projections on Microsoft as well and try to figure out, is Microsoft a good steal deal in this market? By the way, Sofi stock, PayPal stock. If you want me to talk about those stocks, I'm not doing it in this video. No, baby, because those stocks are green. They're not in the stock market massacre. But I did speak about those stocks extensively. I did a 40-minute in-depth video just on SoFi, PayPal, projections, what I'm expecting to happen in their stock prices moving forward, the financials, everything with those business models. That was on the main channel a few hours ago. I posted that. If you don't know my main channel, it's called Financial Education. And that, I think most people on this channel, the reaction channel here, most of you guys know that channel, right? But if you don't, you can type in Financial Education. You can find me on there. And that video went super in-depth into PayPal and SoFi numbers, the earnings, my thoughts about it, what I'm planning on doing with the stocks, all that sort of stuff. If you didn't get a chance to see that one, okay? All right, guys, by the way, pin comment down there today. I'll put my private group as well as access to 1000xstocks.com. If you're looking to level up, application will be the pin comment down there. Celsius Holdings down 52% in the past 10 weeks. Listen, I've been digging into Celsius a little bit. And before we talk about the numbers, the projections and those sorts of things, let me say this. I've just done a lot more study about the business model, the raw business model of where they compete, how they fit in the marketplace, those sorts of things. And I have walked away more bullish on Celsius. So much so that it's like maybe I'll start a position. It's gotten to that place where I'm like, might do something here, okay? And the reason being is they have a really nice niche in the market. And it's a big niche, so I don't think niche is in like it's a small category, but they really have a massive amount of gym goers, personal trainers, people that are looking for that spark, but want something that they view as healthier than, like, let's say a traditional Monster product or a Red Bull or something like that, right? And so many years ago, like 5-6 years ago, Bang Energy came out, then Rain Energy, which was created by Monster, competed against that. And that was kind of a move in that direction, right? And that kind of got people thinking about like energy drinks as potentially healthier, right? But then Celsius came out and kind of took it to the next level. And over the past 4 or 5 years, Celsius has grown into a very large drink business, right? Where you can go across the United States now and to most stores, you're going to find Celsius products in there. Convenience stores, big stores, I don't care if it's a Target, food stores, Walmarts, right? Costco and Sam's Club and those sorts of big stores. And so they've done very well, right? And now just the question is, can they become a monster, right? No pun intended in regards to that. But in regards to Celsius Holdings here, right? If we run some projections on this baby, so let's say they could do about a 30% revenue growth number a year for the next 4 years, right? 30% on average, that is, right? Which would be pretty darn incredible. And let's say they just slightly outpace that. Let's say they did about a 35% clip on net income. By the way, this is our new fancy feature on 1000xstocks.com, baby. Now you can run projections and all that good fun stuff, right? And let's say we're going to do, I mean, if they're growing at a 30% plus clip, revenue, net income, I mean, to be honest, a fair PE ratio is in the, I would say 40 to 70 range for a company like that. 40 to 70. Like, you know, you got to be if you got a company growing 30% plus, you know, top line, bottom line, you expect that to continue, you got it. You're going to pay up. Like minimum, you're going to likely pay like a 40-ish PE, right? So we're just going to run a 40 and a 70 on all these babies, right? Market multiple usually is, we can call it 15 to 20, but if you're growing at a way faster clip than average stock, which obviously is Celsius, then you better command a much higher valuation because people will pay up for that, right? And so we're looking at Celsius today, about $46, right? And so taking a peek here, right? I'll say if we want to, because you know, you're not just, if you're going to buy a stock like Celsius, you're not just owning it for the next year or two, right? You're really focused on the next many years, as you would be with a growth company. So if I look out to like 2028, for instance, right? You know, $5 billion of revenue they should be doing around then, right? About $715 million in net income roughly, right? And if you could command that sort of P range, you're somewhere between about 123 and about a 216, which is a pretty darn impressive CAGR, compounded annual growth rate over the coming years, right? And I don't think those numbers are crazy. Now, the scary thing is, though, I will say, let's say we have that. So let's say Celsius isn't even remotely close. Like, let's say Celsius isn't even remotely close to a 30% clip. Let's say 15%, which I think 15% is probably worst case scenario for Celsius over the coming years. Like, that would be really bad for them. And so let's say they do like a 25% net income number in that sort of situation, which also would not be good in my opinion. If they do only a 25% CAGR in regards to net income, that's not good for this company considering the stage it's at. It should grow way faster than that. But then we're looking at a stock price somewhere between about 91 and about 159. But then you're going to say, well, you're not going to be able to command that sort of PE. So let's say you're going to be willing to pay about a 28 to about a 45. That sounds about right for those sorts of growth rates there, right? So if you're in about a 28 to a 45-ish range, somewhere in there roughly, or we could even take it up to a 50. We'll say, you know, on the high side, a 50. I mean, yeah, you don't have a lot there, right? But that would be a pretty bearish scenario. Keep in mind, Celsius has been growing way faster than 15% revenues and way faster than 25% net income. But in a kind of a bear case, that would be rough for this company, right? Very, very rough. So I don't know. These are just all things to consider in regards to a stock like a Celsius here. So, you know, yeah. I mean, at the end of the day, I think it's pretty close to a buy. I do want to see the next numbers in regards to this one. The only thing I'll worry about is, let's say the next numbers are good and then the stock just blasts higher and then never comes back. That's always a potential, right? But there's so many stocks in the stock market that are deals. Like, I'm not that scared about that. What about Lululemon? So Lululemon, I don't even need to run projections on the stock because we're at a moment with Lululemon where there's real questions about the fundamentals of the business model. Celsius really doesn't have questions about the fundamentals of the business model. Celsius is more of a question about growth rates and the comps year over year. And what are those growth rates looking like over the next 3 or 4 quarters, right? And if it's a much lower growth rate, how do you value that stock? That's a debate in regards to Celsius. The debate with Lululemon is very different, and it's very scary. In regards to Lululemon, people are asking themselves, can this company keep growing into become a Nike? And if they can't, then they're a failure from this step, right? Then they're a floundering stock that's going nowhere. If they can't go to become a global giant like a Nike, right? That's what they have to do. And there's a lot of questions if they're going to be able to do that. We also have seen some merchandise recently that's been posted out there on social media at Marshall's. That's a Lululemon products, which means their product's not moving well enough, so they're having to sell these discount channels. That is like the worst thing for a higher end brand to be seen at like Marshall's and those sorts of places. No, 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 no. What are you gonna be? Under Armour! Come on, man! You're gonna be Under Armour! You keep going that way. And so we got real problems here with Lululemon. And so Lululemon, I look at it and it's like, wow, 50% down this year. Oh my gosh, like, it's such a great stock over the past 10 years or so. Can't touch it. Can't touch it. There's actual real questions about the long-term fundamentals of that company. Estee Lauder. So Estee Lauder, their numbers have been bad, right? But I'll say with Estee Lauder, I don't really doubt the long-term fundamentals of the products they sell and the business model. The short term is kind of the worst case scenario for a company like Estee Lauder. I mean, consumer hit hard by inflation for 3 years. If we look at Asian travel, hasn't been the most exciting over the past few years. That's weighed on Estee Lauder's numbers, right? Asia, a lot of different parts of Asia, including China, weak economically. That's not good for Estee Lauder. So they've just had a lot thrown at them, I feel like, over the past bit of time. With that being said, those brands are lasting. The brands they own are still going to be insanely relevant 10, 20, 30, 40 years into the future, just to be quite honest. And so the brands they own, they're not going anywhere. They're going to remain very relevant. They're going to remain desirable products. They've just been going through a really tough time, but they'll come back. And so that's kind of my view of Estee Lauder. And that's one I look at and I really like this stock. I like these beauty related stocks, right? I own e.l.f. and have owned that for years, 2,000+% gainer for me, right? By the way, Estee Lauder is not a 2,000+% gainer coming in that one, right? I own Honest, which Honest has more than just a beauty business. They have diapers business, wipes, things like that, right? They're kind of like a Procter & Gamble almost. And so I really like that one. In Estee Lauder, I like that one. I might start a position in that one, and it might be sooner rather than later. Shopify's such a freaking buy. I mean, Shopify's such a buy, it's disgusting. It's disgusting. Shopify, you disgust me with how much of a buy you are. The thing with Shopify is every dip's a buy on this stock. Every dip's a buy. Every dip's a buy on this stock, right? At the end of the day, when we look at Shop, I want to pull up like a compare of like, let's say Shop versus, I don't know, who do we want to compare? Let's just compare them to Amazon. Let's just throw up an Amazon there for a moment, right? So obviously Shop trades at much higher multiple than somebody like an Amazon, but I absolutely expect, and I own both these stocks, and Amazon's a much bigger position. I love Amazon for the risk reward profile, but I got to be honest with you, Shop's got much more growth potential over the coming years. If I think about the next 5-10 years, Shopify's growth should be extraordinary, right? Amazon should have good growth. Shopify should have like 20% plus growth, right? That's a difference. Amazon's at a stage in their business model, they're a more stable, mature business. They're kind of at that stage where they're like, you can kind of expect 10 to 15% revenue growth a year. Shopify's at that stage where you're going to expect 20% plus top line, bottom line for the entire decade, like the entire next decade, essentially. And so Shopify is just an easy stock to buy every dip in sight of. It just is, man. That's easy peasy. Lemon squeezy. Speaking about lemon squeezies, ooh, Buc-ee's. Listen, guys, got big news. I just took Buc-ee's off my potential buys watch list. I did it. I was really considering buying this stock. I was really strongly considering it. Looking at their latest numbers, looking at their latest balance sheet, I can't do it. Here's why. The international business is so bad that it's making me wonder if this company actually has like fundamental issues. More like I'm actually worried about Starbucks. Like maybe they got more problems than just like short-term slow sales. And here's why. They grew their store count internationally by like 1,600 stores year over year. But their revenue was still down 7 percentage points. How do you add 1,600 stores and your revenue go down? And not just down, it's down a pretty big number, 7%? Come on, man. That makes me a little concerned about maybe something with Buc-ee's is more fundamental. So, Buc-ee's is a no touch for me. And that's kind of stinks because I kind of really deep down wanted to buy this stock, and I just can't. So it is what it is, right? Mr. Softy. So Mr. Softy, let's first off, the numbers were good out of Mr. Softy. Let me be very crystal clear. Those numbers were very good out of Mr. Softy. There's no systemic big problem in Microsoft. There is a potential Amazon's winning back some market share in regards to cloud. And hey, as an Amazon shareholder, Celsius to the house, baby, okay? I like that. But here's the deal with Microsoft. I mean, you can pretty much expect this company to grow minimum 10% revenues a year over the next many years and 15% minimum net income over the coming years, right? That's pretty much in the bank in regards to Mr. Softy here. So if we run these projections on Mr. Softy, 10% and 15%, right? Which once again, that should be easy peasy lemon squeezy in regards to this one. We're going to be looking at, so Microsoft, I would put the PE somewhere between 25 and about 35 is appropriate for Microsoft. If you go over 35, I think you're getting a little high in regards to this one. If you're getting under 25, that's way undervalued for Mr. Softy. The business model is way too stable. In a recession, they're still going to be putting up good numbers. In high inflation, they're still going to be putting up good numbers. In deflation, they're still going to be putting up good numbers. It doesn't matter. It's Mr. Softy. So, the stock after hours, what do we look at there? What is that, about 400? What are we looking at? About 400, let's call it, right? It's technically a little under, but let's just call it 400. So, the stock, if we look at 2025 and we assume a 10 to 15% number, which is, pretty conservative, I feel like. The company's been putting up better numbers in this, right? The stock's it's valued about right where you should be, right? But I want to think about long term, 2028. So 2028, you're looking at about a $500 stock to about a $700 stock roughly, right? Do I see Microsoft as kind of a $500 to $700 stock in that price range in 2028? I would say probably, yeah. So if I look at Microsoft at 400, I think it's a buy from a long-term perspective. But with that being said, obviously, it's a steal deal under 300. So that's just the way I would think about Microsoft. It's between 400 and 500, it's a buy. If you can ever get it under 300, it's a steal deal. But, in order to get it under 300, you really need some sort of systemic market crash scenario or something like that. And also, with that being said, there's a lot of better opportunities in the market than Microsoft, right? Microsoft's a great company. It can be a staple of a portfolio. Like if somebody's looking for a staple of portfolio, like Mr. Softy's right there. But at the same time, there's better staples of a portfolio, in my personal opinion, out there, right? If we go ahead, this is my base case for Meta. I ran them at a 12% revenue growth number and a 14% net income growth number. That's pretty darn conservative in regards to Meta on average for the next 4 years or so. And that puts the stock somewhere between about 600 and about 900, right? So, and that's a pretty darn conservative base case in my opinion in regards to Meta. So I like Meta better as a portfolio build around than I like Microsoft. But with that being said, Microsoft's still good as well, right? There's better. And that's Meta. That's Meta in regards to that, right? Now, next up here, we have, in regards to the Crash Squad, Nvidia. So, it's a buy. It's a buy. It's a buy. Here's the deal, though. You have to be prepared for short-term volatility in regards to this one. But who have we had report so far? We had what? Google McDougal. We had Tesla Myesla. We had Mr. Softy, right? Meta's coming. What are all the big dogs that have reported so far? What are they basically confirming? CapEx for this year and likely next year. And what do we know from these companies? They're going to be spending even more moving forward than they've been spending, which means Nvidia is going to be making even more money than they've been making. And so Nvidia is just in a sweet spot. The stock moves around huge. I mean, the stock literally moves around hundreds of billions of dollars in market cap in snaps of fingers. But with that being said, the business model is absolutely phenomenal. It's doing tremendous. It's going to continue to do tremendous until these big tech companies stop spending so dang much on these Nvidia chips. And as of right now, at least, we don't see that anytime soon, right? So at some point that will happen, but you might be waiting until 2026. You might be waiting until 2027. You might be waiting until 2028 or 2029. Like at some point that will happen, but it's just like, it's taking a while to get there, right? So yeah, Nvidia sets up very, very, very well. CrowdStrike, no touch, no touch, no touch. I don't even care if there can be money to be made there. No, it's too much of a mess. You can't even, I don't even think you can accurately run financials for the next year or two in regards to this company, because you don't know how much downfall will be in regards to this whole situation they went through. So I just think it's a no touch. And because the valuation is so high, it doesn't make the risk reward's just not attractive enough there, right? So it might be at some point, but as of right now, no. If it was a $100 stock, it'd be very different, because then we're talking about a forward P of 30 or so. Okay, now we can talk, but a forward P is still very high on the stock. I think we're 60 or so on that baby. So, just doesn't make sense. Okay, let's react to a couple of videos here. AMD, and then we'll get to Mr. Softy.
Months ago, the stock is up 5% after reporting record revenue in the data center segment. Joining us now is Christopher Rowland, Susquehanna senior analyst. Christopher, strong ramp here on Instinct GPUs, but is it worth wondering how much of that momentum continues beyond the ramp quarter?
Yeah, very good initial read here, but we are absolutely waiting for the conference call. We're waiting for Lisa Su to either raise or not raise that full year Instinct AI GPU number, and we will see. We said in our preview we would likely think they were going to raise it $500 million to $4.5 billion for the year, but we will see.
Okay. What if they don't raise it?
So I really like Lisa Su as a CEO. Now, let's be very crystal clear, though. She's gotten her butt kicked by cousin Jensen, right? Cousins, right? Jensen's been kicking her butt over the past year and a half. Like, we just got to be honest, right? With that being said, I like Lisa. She's a phenomenal CEO. She turned this company from a $2 stock into what it is today, which is, one of the most looked at, invested in stocks in the market. Absolutely incredible the turnaround she's had, right? That's the first reason I really respect her, is what a great job she's done. Tremendous, right? Like, that's like Hall of Fame. She should be put in like the stock market Hall of Fame of like greatest CEOs ever. Like taking a stock from $2 joke of a company into what it's become, like legendary, right? The second reason I really respect Lisa on such a high level is she never really like pumps it. She could easily come out and pump this and that. And, I feel like she's very conservative with the way she talks, with her numbers, those sorts of things. I just really respect that, because she doesn't have to do it that way, right? And so, because I know a lot of CEOs that they downplay anything bad, and then, the top stuff is like the greatest thing ever. And she just doesn't really do that. And so I respect that. And so, very respected CEO. Yeah, she's gotten her butt kicked by Jensen last year and a half, but at the end of the day, she's still Mount Rushmore of greatest CEOs of all time.
Do the rest of the results that we got in this earnings report matter as much? Or would they be enough to I guess, offset a lack of a raise?
Sure. These are nice numbers. They're a little bit better than expected, but we think the swing factor here in terms of the stock price is going to be that MI 300 guidance or not.
You know what I was just thinking? Like, could you imagine like Jensen or Lisa being like president of the United States? No. Why? Because they're too damn smart. Like you could never see that, right? Like, why do people like that not run for president? Why can we not vote for those sorts of people, right? They're way too freaking smart for that. They're like clown show. Like how much they would have to like bring down their IQ level to even like get people to vote for them it'd be so sad. So sad. Like they couldn't lower themselves to that, right? It's just, yeah, pride. Microsoft shares slip as Azure revenue growth misses expectations.
They're out. Steve Kovac has the numbers.
Hey, Morgan, I was reading your mind here. It is a beat on the top and bottom lines here. Let me go over what we got. EPS coming in at $2.95. Street was looking for $2.93. Revenue, just a slight beat here, $64.7 billion. Street was looking for $64.39 billion. And then Azure cloud growth, as you know, super important. That did miss expectations here. Street was looking for 30.2%, but they printed here 29% Azure revenue growth. I'm going to keep digging through these numbers and come back with some more commentary for you guys. Especially important how much of that Azure cloud growth was related to artificial intelligence. I'll be right back with you guys on that. Back to you.
Okay, and we will come back to you as soon as you have more to bring us. So, Kevin, yes. I mean, right there, you've got shares of...
That's the thing with Microsoft. The numbers are good. They had beats almost across the board, and then this small miss in regards to cloud, right? If Microsoft's such a stable business model, they're not really ever going to blow it out of the water. It's just not that sort of company. It's not like, oh, beautiful hummingbird coming right up to the window. Hi, baby. Oh, man, look at the wings. I mean, the wings are incredible. So, Mr. Softy, like, it's not that sort of business model that's going to blow it out. It doesn't work like that. Their business model is stable, predictable over time, right? And so when they beat, it's going to usually be small beats, right? And if they do miss anything, it's going to be a small miss. So sure, miss, big deal. Like 1%, come on. That's baby number, you know. So anyways, but sometimes these stocks do price in a lot. And I think that's the game of Wall Street here.
Microsoft now down more than 7%, largely on this Azure cloud miss. I mean, 29% represents a deceleration in the growth that was starting to perk up in recent quarters.
It's a slight miss on their Azure revenue growth. But what I will point out is investors need to remember that the AI CapEx spending game is a long game. And it may be years before we start to realize the benefits of all those investments. Microsoft was very early to the game. They continue to spend in the areas of AI. I think there's work to be done on the Copilot side. They have to address security concerns. They have to address a higher price point. But Cloud Azure is going to be their revenue for growth potential for years to come.
Okay, Paul, this is traditionally a difficult quarter for Microsoft if you're just looking at the quarter itself, also the end of the fiscal year, and we're going to get more sense of the guidance on the call. So, I mean, how much does this Azure, you can call it a miss because certainly the whispers and the hopes were higher. Can AI assuage any of that, or is it perhaps proof that AI can't do everything?
Yeah, I mean, I think, John, what you said is the key point is that this quarter is usually a weak quarter for Microsoft in terms of its earnings and its stock price reaction. It's historically weak in reaction to this July report. Last quarter, Azure was the, stronger than expected. Stock rallied. So this quarter, we're seeing the opposite and the stock's falling. What I think is really interesting that you mentioned AI is ever since the launch of, from 2001 up until ChatGPT was launched, Microsoft, when it reported earnings, had an average move of about 1 to 2% up plus or minus in reaction to its report. Since ChatGPT, the last 6 quarters, I believe it is.
What do you call it?
Its average move is plus or minus 10% or 12%. So it's become very volatile in reaction to earnings during these periods. But the overall trend for the stock has been up. It's just the short term, the market gets ultra focused on the smallest beat or gain because
that's a buy. That's a buy, baby.
There's just so much focus on the cloud and AI here.
Could see some reaction there. Amazon taking it on the chin, another hyperscaler down more than 3%. NASDAQ 100 not faring well as all in reaction to Microsoft being down a little more than 7, Morgan.
Yeah. It goes back to, it raises the question, Kevin, the great rotation.
Yes.
As we've been sort of debating whether this...
So, Amazon, buy. It's a buy, baby. It's a buy. It's a buy, 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 buy. Appreciate everybody joining me as always. Thanks so much for being here, folks. We're busy. It's earnings season, man. The amount of reports I've been looking at the last few days got my eyes going crazy. I think I need some more Celsius in my system. All right, guys, much love as always. Appreciate you joining me and have a great day. Pin comment if you want the access to 1000X or my private group. Take your game up to the next level. Celsius level, baby. Peace.